Today, we are going to break down one of the most incredible insider trading cases to come to light in a long, long time. It's a story that has everything: a government official, a former student, and a stock market bet that was so perfect, so impossibly well-timed, that it just couldn't be a coincidence. So let's start with this number: 173 crore rupees. That's the mind-boggling amount of profit that a small group of people managed to rake in, and they did it in just a couple of days from a single bet. It's a figure that just sounds unreal.
And here's the craziest part. These weren't some seasoned stock market gurus or hedge fund wizards. Nope, most of them had never even made a trade like this before. So the big question is, how on earth did they know, with what looks like absolute certainty, that a company's stock was about to nosedive? That's the very question regulators started asking themselves.
All right, so the story really begins when the market's own surveillance system started flashing some serious warning signs. There was some trading activity that was so unusual, it was practically screaming red flag.
Okay, take a look at this chart. It shows the trading volume for something called put options on the Indian Energy Exchange, or IEX. Now, a put option is basically a bet that a stock's price is going to go down. And look at this pattern. For days, you see almost nothing, just tiny little bars. Then, bam! A massive, massive spike in trading on July 21st and 22nd. And right after that, back to nothing. A pattern this clean, this perfect, almost never happens by chance. Someone knew something big was about to drop.
So, what was this huge news they were betting on? Well, it all came down to one single, game-changing decision from a powerful government regulator.
On July 23rd, the Central Electricity Regulatory Commission, we'll just call them CERC, announced a new rule that was going to totally shake up how electricity is traded in India. The very next morning, the stock for IEX just fell off a cliff. It plummeted. This decision was the bomb, and these traders knew exactly when it was going to go off.
So what was this new rule? It was called market coupling. Sounds complicated, but the idea is pretty simple. Instead of having a bunch of different energy exchanges all setting their own prices for electricity, a single central authority would now set one uniform price for everybody.
And this little comparison really lays out why that news was so catastrophic for IEX. See, before, IEX was the top dog. They were so dominant that they basically set the price for everyone else. But after market coupling, that massive advantage, their key selling point, was about to vanish. Investors immediately saw that this threatened their entire business model, and, well, the stock price reacted exactly how you'd expect.
So, you have a suspiciously perfect trade, followed by a totally predictable stock crash. You can bet that got the attention of the Securities and Exchange Board of India, or SEBI. They immediately launched an investigation to figure out who was pulling the strings. And as soon as SEBI started digging, things got really weird. They found that the same small group of names just kept popping up. But here's the thing, these weren't pros. In fact, for most of them, this was their first time ever trading IEX options. Yet here they were, making these massive, sophisticated bets with absolutely perfect timing. The whole thing just didn't add up.
And the profits they made were just astronomical. The whole group, together, walked away with 173 crore rupees. One guy, Bhuvan Singh, personally pocketed about 72 crore of that. So again, the big question for SEBI was, how did he and his friends know exactly when and how to place these bets?
The investigation was about to uncover the human story at the center of this whole thing, a direct link that went from the traders straight to the source of the confidential information.
And there it was, the connection that blew the case wide open. Investigators found that Bhuvan Singh, the guy who made 72 crores, had a direct line to a senior official at CERC, who they call O1. And she wasn't just some random employee, she was a chief in the economics division, someone directly involved in writing the market coupling order. The connection between them? He used to be her student.
So here's how the information pipeline seems to have worked. The CERC official, O1, had access to top-secret meeting minutes about the new rule. According to SEBI, those minutes were then passed along to Bhuvan. He, in turn, shared the info with his buddies in a WhatsApp group, basically giving them the green light to make their move.
So now they had the connection. The next step was to find the hard proof. Investigators raided the suspects' homes and offices, and what they found on their phones and computers really told the whole story.
This timeline is wild. It just shows you how quickly this all went down. The final decision was made behind closed doors on June 30th. By the middle of July, the info was leaked. On July 21st, the trade started flooding in, and less than 2 months later, SEBI was knocking on their doors.
And the evidence they found was just damning. They found actual confidential CERC documents in their homes. But my favorite piece of evidence? They found phone search histories for things like how do put options work? I mean, come on. It proves they were total amateurs who were literally Googling how to pull this off. They also found traces of deleted chats with the CERC official and a web of bank transfers trying to hide the money.
But here's the real kicker. The timing of one particular action was incredibly suspicious. The very moment the stock exchange started sending out official queries about the weird trading, poof, the WhatsApp chats between Buvin and the CRC official were deleted. For investigators, that's a massive sign of guilt, a clear attempt to destroy the evidence.
Okay, so with this mountain of evidence, SEBI wasn't about to wait around. They moved fast to make sure those illegal profits couldn't be touched and that these individuals couldn't cause any more chaos in the market.
And SEBI's action was swift and powerful. First, they froze the entire 173 crore rupees, all of it. Then they banned all 8 people involved from trading in the market while the full investigation continues. And finally, they ordered all that frozen money to be put into secure accounts. This is just an interim order, but it sends a very strong message.
Look, this is an incredible case study in how regulators can follow a digital trail to unravel a pretty complex scheme. But it also brings up a much bigger question for all of us, right? This group got caught, which is great, but it's a stark reminder of the constant fight to keep our financial markets fair for everyone. It makes you wonder, what does it really take to guarantee a level playing field where the average person has the same fair shot as someone with an inside connection? It's definitely something to think about.